So here's a question for you. How are companies, actually managing their environmental footprint these days and their energy use? It feels like it's everywhere.
It really is. It's become absolutely central, hasn't it, for business strategy, for government policy.
Exactly. And that's what we're digging into today, this huge, rapidly growing global market for sustainability and energy management software. We're basing this deep dive on a really comprehensive report from Cognitive Market Research. It's called Global Sustainability Software Market: Growth and Regional Trends.
Right. And our goal here is, well, it's to unpack the key takeaways from that report for you. We won't just throw numbers around. We really want to get into the why behind them. What does this massive growth actually mean for businesses, for the planet, and honestly for you and future opportunities? It's pretty compelling stuff when you connect the dots.
Okay, let's get into it then. The big picture first. This global market for sustainability and energy management software. Well, the growth is just remarkable. Back in 2021, it was worth just over $1.2 billion.
Sounds like a lot already, but
Right. But look ahead to 2025, it's projected to hit nearly $2 billion. And then, this is the kicker, by 2033, it's expected to surge to, get this, $4.6 billion.
wow. So more than doubling again in those later years.
Exactly. It's not just steady growth, it's accelerating. That works out to a compound annual growth rate, a CAGR, of 11.8% over that whole period. I mean, that's more than just, small improvements. It really signals a fundamental shift in how businesses are operating.
And the why behind it is fascinating. It's tied directly to how vital these digital platforms have become for everything, really. Operational efficiency, yeah, but also hitting regulatory marks and just, well, environmental stewardship. Think about it. Companies, governments are all making these huge commitments now. Net zero emissions, ESG compliance, environmental, social, governance. That ESG stuff is seriously shaping investment decisions now.
Right, ESG's everywhere.
It is. And there's this massive push for energy optimization.
Yeah.
You can't really hit net zero just by, hoping. You need to track everything. Every kilowatt hour, every ton of CO2, often across these incredibly complex global supply chains.
Impossible without the right tools, I imagine.
Absolutely impossible without sophisticated software. So companies aren't just like ticking boxes. They're genuinely using digital transformation for their sustainability reporting, for monitoring how they're actually performing. And interestingly, they're finding new efficiencies this way too, things they couldn't see before. It's actually shifting sustainability from just being a cost to something that can drive value.
That makes a lot of sense. So, okay, we see this huge global trend, but how does it break down regionally? I mean, is everyone adopting this at the same pace, or are there, hotspots?
That's a great question. There are definitely regional differences. Let's start with North America. No big surprise, it's a technology leader, right?
Right.
So it holds a major chunk of the market. We're looking at growth from about $385 million back in 2021, climbing to over $1.4 billion by 2033. That's a solid 11.4% CAGR.
Okay. And within North America, I assume the U.S. is the big driver.
Yes, the U.S. is definitely dominant. Its market is set to grow from around $272 million to almost $1 billion by 2033. So, yeah, huge.
But the report highlighted Canada too, didn't it? Something about its growth rate.
It did, yeah. This is interesting. Canada actually has the highest CAGR within North America, a really strong 12.6%. It's jumping from about 79 million to over 340 million.
Wow, 12.6%. Why do you think Canada's pushing ahead so fast there? Any specific reasons jump out?
Well, it's likely a mix of things. Canada has some pretty progressive environmental policies, right? Plus significant investment in renewables. And I think there's a corporate culture there that's maybe integrating ESG a bit faster into, core operations. They seem to view it as both essential for compliance and a competitive edge. Mexico is also showing decent growth, around 11.3%, so it's definitely a regional trend.
Okay, interesting. Let's hop across the Atlantic then. What about Europe? How's the market looking there?
Europe's also very dynamic. It's growing from just under $300 million in 2021 to projected over $1.1 billion by 2033. That's an 11.6% CAGR. Pretty similar overall to North America.
And the drivers there, I guess the EU Green Deal and regulations play a big role.
Absolutely. Europe's ambitious climate targets and strong regulatory frameworks are huge drivers. You see it in specific countries, too. The UK, for instance, is really showing strong growth, a 12.8% CAGR. That pushes its market from about 50 million up to over 200 million. Germany's also very strong, 12.1% CAGR, driven by its industrial base and the energy Wende, their energy transition focus.
Okay, established players leading the way. But I saw something in the report that seemed, well, kind of surprising. The rest of Europe category.
Ah, yes. You noticed that too.
Yeah. It often gets lumped together, but it actually had the highest key GR in the whole European region, something like 16.6%, growing from about 7 million to over 40 million. What's going on there?
That's a really sharp observation. It's fascinating, isn't it? That high growth in the rest of Europe could mean a couple of things. Maybe some countries are playing catch up and adopting faster now, or it could be driven by, specific new national policies or big infrastructure projects in some of those countries that are just leaping straight to the latest software solutions.
So, pockets of really intense activity.
Exactly. While countries like France, Italy, Russia show pretty consistent growth, that rest of Europe figure really points to some rapid development happening, maybe under the radar a bit.
Okay, let's shift focus eastward. Asia Pacific. The report forecasts really strong growth there too, right?
Oh, definitely. APAC is projected to go from around 209 million in 2021 up to almost 870 million by 2033. That's a 12.6% CAGR overall for the region. Very robust.
And what's fueling that? It's such a diverse region.
It is diverse. The growth seems to be coming from a mix of, well, rapid industrialization in many areas, but also growing environmental awareness, and importantly, more government mandates coming into play.
Mm.
India is a real standout leader in APAC in terms of growth rate. It has the highest regional CAGR at 13.5%. That takes its market from about 29 million up to over 135 million.
That's significant growth for India.
It reflects India's scale, obviously, but also its increasing focus on sustainable development, even as it industrializes rapidly. China remains the biggest market in APAC in absolute terms, of course, growing steadily at 12.7%.
And there was another standout in APAC, wasn't there? Taiwan.
Yes, Taiwan's growth rate is actually the highest in the entire APAC region, even higher than India's. It's showing a 13.7% CAGR. Now, it's starting from a smaller base, just over 4 million, but projected to hit nearly 23 million. That suggests really focused, rapid adoption.
Any thoughts on why Taiwan specifically? High-tech manufacturing, maybe.
That's very likely a big factor. Taiwan's high-tech manufacturing sector needs really sophisticated energy management, emissions tracking, that kind of thing. Combine that with strong government support for green initiatives, and you get that kind of growth.
Yeah.
Singapore and Southeast Asia generally are also showing strong performance, so it's definitely a region-wide push.
Okay, let's head south now. South America. How's the market shaping up there?
South America is also seeing solid expansion. It's going from about 155 million in 2021 to nearly 560 million by 2033. That's an 11.3% CAGR.
What does that mean for a region like South America balancing, rich resources with development needs?
It signals a growing understanding, I think, among businesses and governments there about sustainable resource management. Compliance is becoming more important, too. Brazil, being the largest economy, naturally plays a big role. Its market is set to more than triple, hitting over $200 million with an 11.4% CAGR.
So Brazil's adoption could influence others.
Potentially, yeah. How Brazil embraces this could set a precedent for other developing nations dealing with similar challenges, resource management, cutting carbon. Argentina is also worth noting, showing slightly higher growth in some sub-regions at 11.6%.
Got it. Okay, next stop, the Middle East. Also seeing significant growth, the report says.
Yes, the Middle East market is growing from around 93 million to over 385 million by 2033. That's a 12.4% CAGR.
And that region has its own unique economic drivers, those big national vision plans. How does that factor in?
That's exactly it. This is a really interesting case. You look at Saudi Arabia with a 12.9% CAGR and the UAE at 12.8%. Those high rates are directly tied to these huge government initiatives. We're talking about things like Saudi Vision 2030. These aren't just vague goals. They explicitly map out environmental sustainability and economic diversification.
So it's top-down driven.
Very much so. Governments there are embedding ESG requirements and net zero targets right into their national strategies. And they see this software as, well, a fundamental tool to actually track progress and achieve those massive transformations.
Okay, that makes sense. Finally, let's round out our world tour with Africa, a continent undergoing huge changes. How's the market evolving there?
Africa is definitely evolving rapidly. The sustainability software market there is projected to grow from about 73 million in 2021 to over 307 million by 2033. That's a healthy 12.2% CAGR.
And who's leading the charge in Africa?
It's quite dynamic. Nigeria, showing a 12.7% CAGR, and South Africa at 12.9%, really stand out as leaders currently. A lot of their growth is tied to industrial expansion happening there, but also, crucially, a pretty fast adoption of renewable energy projects.
So they're building in sustainability from the start in some cases.
Exactly. As these economies develop infrastructure, they're increasingly integrating modern sustainable practices right from the ground up.
Hmm.
And this software is absolutely critical for managing and optimizing those new energy systems and industrial processes.
So pulling it all together, I mean, the picture is incredibly clear, isn't it? Robust, sustained growth pretty much everywhere for this sustainability and energy management software. It's obvious that these big drivers, net zero commitments, ESG becoming mainstream, the urgent need for energy optimization, they aren't just talk. They're really pushing companies to adopt these digital tools.
Absolutely. It's a fundamental shift. Companies are using digital transformation not just for general efficiency anymore, but specifically to measure, manage, and ultimately actually improve their environmental impact across the board.
It's happening.
It really is. And, thinking bigger picture, what does all this massive global investment in sustainability software mean? Like, for the skills people will need, the kinds
Yeah.
of jobs that will be in demand, and maybe even how this digital transformation could reshape things beyond corporate reports. Our cities, maybe our energy grids, the actual products we buy day to day.
That's a really interesting angle to think about. What are those downstream effects? Because these trends clearly aren't slowing down. It'll be fascinating to see how these tools keep accelerating not just environmental progress, but maybe new kinds of economic development too.
Yeah.
It really feels like a fundamental shift and one that ultimately impacts all of us way beyond the boardroom, something to definitely keep an eye on. Welcome to the deep dive. This is where we take those complex topics and really boil them down to what you need to know fast. And today we're diving into something that's, well, it's becoming really essential for businesses, kind of quietly, but definitely essential. We're talking about the sustainability and energy management software market. Our mission, cut through all the buzz and get you the core insights, the things that, actually matter.
Yeah, it really is fascinating. Because this market, I mean, it used to be pretty niche, right? But now
Yeah.
it's an absolute necessity for companies all over the world. They've got pressure from regulations, energy costs are just soaring,
Right.
and they have these huge climate goals they need to hit. And the
Mm.
tech, well, it's not just helping out anymore. It's really becoming the backbone for handling their environmental duties and, importantly, their profits, too.
That's a powerful way to put it. Backbone for responsibility and profits. Okay, so let's unpack this. What's really, really driving this boom? When
Yeah.
you look at the sources, three big things jump out. First, regulatory demand. Governments, financial regulators, they're all tightening the rules. They want way more transparency on emissions, energy use, sustainability stuff. We're seeing major global standards take hold, like the GHG protocol, the greenhouse gas
Right. The
one,
framework, yeah.
or CDP, the Carbon Disclosure Project, pushing companies to report, and the EU taxonomy, too, defining sustainable investments in Europe. And the software, it changes everything. It's not just ticking boxes anymore.
No, not at all.
It gives them the tools for, accurate tracking, transparent reporting. It's about credibility with investors, with everyone.
Exactly. It really turns compliance into, well, a competitive advantage.
Yeah.
It's not just avoiding fines. And that connects right into the second big driver, energy efficiency and cost savings.
Yeah, the bottom line.
Precisely. Businesses are putting money into this software because, frankly, it saves them money. It helps them find where they're wasting energy, automate systems, even predict usage to cut down those utility bills. So it's not just a green thing, it's a profit driver. You get real measurable ROI by cutting those operating costs.
Yeah, you can really see the appeal there. Tangible savings. That makes perfect sense. And then maybe the most forward-looking driver, the big picture one, net zero commitments.
Yes, absolutely.
So many companies are making these pledges now, right? Carbon neutrality, science-based targets. And you just can't do that without serious digital tools.
You really can't.
These platforms go way beyond just monitoring. They let companies model their emissions, track progress properly against those targets, really align what they do day to day with their long-term climate plans. It's about planning, acting, reporting, the whole package.
A holistic approach.
Exactly. But okay, it sounds great, but like any market moving this fast, it's not all smooth sailing. There've got to be some hurdles.
Right.
And the sources definitely point some out. One that really stands out is just the implementation cost.
Oh, yeah.
It can be significant.
We're talking a serious investment, both money and technical effort, especially for big companies with lots of sites. Integrating this stuff with their existing systems, ERPs, IoT networks, building management. It's complex and challenging for medium-sized businesses, too. They might see the long-term benefit, but that upfront cost, It's a barrier.
Definitely a barrier.
And that connects to another big restraint, I think, which is data complexity and quality.
Ah, the data. Always the data.
Right. I mean, these fancy tools, they're only as smart as the data you feed them. They need accurate stuff from sensors, utility bills, operational logs, all sorts of places. But if that data is inconsistent or missing, or if people are still typing things in manually,
Reliability just plummets.
exactly, you get bad insights, delayed decisions,
Mm.
and worse, it can actually damage trust. That
Mhm.
trust needed for ESG reporting, environmental, social governance. That can cost way more than the software. It really makes you ask, how good is your data really?
That's such a critical point. Bad data in, bad decisions out limits the whole thing. And another hurdle this source has mentioned is limited adoption in developing regions.
hmm The global picture isn't uniform.
Right. In many parts of the world, sort of emerging economies, this whole idea of enterprise sustainability is still, well, it's newer. You've got budget issues, maybe less regulatory push, infrastructure gaps.
Yeah.
It just makes it harder for smaller or medium businesses there to jump on board with these sophisticated tools, even if they'd benefit eventually.
It creates a kind of sustainability tech divide, doesn't it?
Yeah, a divide. So, okay, challenges exist, but the market's still pushing forward hard. What are the big trends making that happen? What's reshaping things? One that seems huge is IoT and smart building integration.
Oh, absolutely transformative.
You've got smart meters, sensors everywhere, feeding back real-time data, really granular stuff, energy use, waste, emissions, right inside the building.
Constant stream of information.
And that lets you automate things, run buildings more efficiently, predict when equipment needs maintenance. It basically makes green buildings genuinely smart and much more cost-effective.
It really moves things from static reports to a dynamic, responsive system. And building right on top of that real-time data flow is the next big trend, AI-driven predictive analytics.
Okay, AI. Tell me more.
This is where machine learning really starts to pay off. Algorithms can analyze all that data, spot patterns, detect anomalies humans might miss, and even run simulations like, what if we change this process, or what happens if this regulation comes in?
Wow, okay. So it helps them look ahead.
Exactly. Anticipate energy spikes, buy energy smarter, react faster to problems or policy shifts. It makes businesses proactive, not just reactive.
That ability to anticipate, that seems incredibly valuable. And the last trend that seems to be making this tech more available to everyone, the shift to cloud-based and SaaS delivery models.
Yes, software as a service. That's huge for accessibility.
How so?
Well, instead of buying and installing complex software, you subscribe, access it online. It's scalable, grows as you grow. Teams can access it from anywhere. It integrates more easily with other tools like carbon accounting or those ESG dashboards we talked about.
Right, the dashboards.
And crucially, the SaaS model usually means lower upfront costs, faster setup, more manageable payments. It really lowers the barrier to entry, making these powerful tools attractive, even if you don't have massive capital to invest upfront.
Makes sense. More flexible, less initial pain.
So if we bring it all together, synthesize this, what really emerges is that this sustainability and energy management software market, it's not just some sideshow. It's really becoming a cornerstone of this global shift towards, well, a greener and more efficient economy. It's this unique spot where technology, regulations, and climate strategy all meet
Diverge? Yeah.
and create real, tangible impact for businesses and, for the planet too.
Absolutely. Couldn't agree more. And as we've sort of explored here, it's clearly moved beyond just being green for the sake of it. This is about smart business now. It's about strategy, growth, making operations resilient. So thinking about everything we've covered, what stands out most to you listening? How might these trends we discussed, the IoT, the AI, the SaaS models, how might they ripple out, not just for the huge corporations, but maybe for smaller businesses, or even how you think about energy day to day? What new opportunities or maybe new challenges pop up as this tech gets, well, everywhere? Something to think about. We definitely encourage you to keep digging into how technology is reshaping, well, everything.